How's it going, everybody? I am here with Jordan, who is a software developer. You do some work with cryptocurrencies.
Yeah, I build libraries for Ethereum.
Oh, okay, right on. So you have experience with cryptocurrencies.
Sure.
But you're not an expert because there's no such thing as one, right? Everyone's claiming to be.
Yeah. The more you work with cryptocurrencies, the more you realize that you don't know. So it's just one long learning process. It's like training to be like a Tibetan monk, where you would never say, "Oh yeah, I'm an expert at Zen Buddhism." It's like, no, you need 30 years of Zen to become an expert.
And also, I feel like it's so new that what's true today could not be true tomorrow in some areas.
Yes, we're in uncharted territory with cryptocurrency. Bitcoin is, at a $70 billion market cap right now.
It surpassed PayPal.
Yeah, this is uncharted territory. We don't know what happens next, and that's what's so exciting.
I'm just going to ask a general question right quick, because Bitcoin has been going up so quickly. Like right now I can see it's at 4,264. A lot of people are worried that it's going to take a huge hit, that it's gone up too high, it's got to come down. Do you think, I know trading isn't necessarily, but based on somebody who's done work with crypto, what do you think? Do you think it will just keep going up?
I can't speak to the daily market fluctuations. Like, it's very possible it'll consolidate back down for a while, but I think in the long term, it'll undoubtedly continue to get more and more money put into it.
I heard a lot of companies they're hiring developers based on Ethereum and blockchain technology.
Yeah, so let me show you this chart. This chart says all that you need to know, right? If you look at the chart of the US dollar versus Bitcoin over the last 2 years. So this is the purchasing power of the US dollar 2 years ago versus Bitcoin, and it's been a steady decline down. So if you're storing wealth, why would you want to store it in something that's getting crushed against another asset when you could buy that asset directly? And I think a lot of institutional money is looking at charts like this, like, well, the purchasing power of Bitcoin continues to go up, the purchasing power of the dollar continues to go down. Like, I'm going to start putting real wealth into it. And I think that's probably been the main driver of the like what you've seen in this price hike over the last 2 or 3 months, is that there's a lot of institutional money coming in now.
So, all right, here's the important question. What is Ethereum? Everyone keeps talking about it, saying you got to buy it.
Right. So Bitcoin was a technology that was intended to send, basically to send money from one party to another, and it was limited to that specific action on the network, which is I want to take some coins and I want to send it to other. And what happened with Bitcoin is, for the first time in history, you had created digital scarcity. So if you think like to the 1999 and 2000, when people were putting music on the internet, it was trivial to just copy it and pirate it. And that's, became a huge issue when Napster blew up, and LimeWire and Kazaa, and eventually BitTorrent and the Pirate Bay. But everyone had always just thought that if you have some sort of digital asset, you could just copy it and then make another copy of it because it's just bytes. But Bitcoin was the first technology that made that impossible. And obviously there's, in-depth technical reasons why that's true. But the thing that was interesting is that it does work, right? You can own a Bitcoin and nobody can just copy it. It's exclusively yours. So people thought that that was an interesting concept, and they wanted to take other assets and try to tokenize it and put it on top of Bitcoin. So what's something that should be scarce? Let's talk about like equity in a business. So if you could have a venture between multiple people and there's only a certain amount of shares, well, if you could tokenize that on top of the Bitcoin ledger, then you could do really interesting things like easily transfer that equity anywhere in the world, or have transparent kind of views into how much of that equity had gone to be deployed against certain purchases versus others. And people found that idea of taking other things and mapping it onto Bitcoin really interesting. But because of the way Bitcoin was created, it was really hard to actually implement that. Like, it was hard to take other things that you wanted to be digitally scarce and put them onto Bitcoin. And that was the main reason Ethereum was created, to be like a more general programming environment where people could create all sorts of, to leverage the things that made Bitcoin great, but to make easier for developers to build other things and put it on top of the Ethereum blockchain. So Ethereum launched in 2014, and it has a programming environment that people generally refer to as smart contracts. So an analogy I like to use when explaining this to people is you can think of Bitcoin sort of like a Google Doc spreadsheet, where on one side is a list of accounts and on the other side is a list of balances. And anyone can view that, but you need a specific password into a cell in order to actually update the values. Ethereum would be that same thing, only adding formulas. So if you've used Microsoft Excel, you know how powerful spreadsheets can become with just a small amount of formulas.
Yeah, putting addition, subtraction.
Yeah, exactly.
The sum of this column.
Right. So with what you're seeing with like ICOs, like think about how.
Well, hold on before we move forward.
Oh, sure.
What's an ICO? Because we've heard that a lot.
Sure. So I will. I'll get into that in a second. But what I was going to say is like think about how easy it would be to make a cell with a formula that's like if a certain amount of ether is sent to an address by a certain timestamp, keep the money, or else refund it. That's basically what Kickstarter does. Only you're doing it in just like a very simple formula in this like giant global ledger. So the idea of an ICO is that.
Well, yeah. What does it stand for?
So an ICO stands for initial coin offering. Which is kind of a really loaded term because it makes you think of IPO, which is something that people do after they have product market fit and tons of users and revenue, and it's a way to raise public funds. But it's after you've done all this work, right? ICOs are traditionally right now done before people are doing any work, right? They're used almost like Kickstarter, like to crowdfund projects.
So my understanding is these companies will say initially we're going to release this many coins that you can buy, and then they use that money as like funding.
Yeah, so companies will, there's two different ways to do it. Like you can basically build a network that uses a protocol token as some sort of utility within the network. So a great example would be Filecoin, which just had their ICO and raised more money than anyone's ever raised. I think it was over $200 million, but I'm not sure what the final number is. But what they're saying is that they're building a distributed storage network where you can spend a little bit of Filecoin to get a piece of data stored on other people's hard drive space. And then somebody else could rent out their hard drive space and make Filecoin as revenue for doing that. So right now there's no way to just rent out your hard drive space and make money from doing it. So they're building their own kind of economy that has this protocol token as the currency. And then they pre-sell a bunch of that token for US dollars or Bitcoin or Ether, which they can then deploy that capital to hire employees and actually build out the network.
So a token is kind of like a Bitcoin.
Yeah, it's its own, for Filecoin specifically, is its own blockchain. Some of the ICOs build their own blockchain. So Tezos, for example, is building their own blockchain. That was another big ICO.
That's like their own server network that...
It's their own code that everyone on the Tezos network has to run. But there are other tokens that are built specifically on top of Ethereum. These are what you call like ERC20 tokens, but you just need to run Ethereum, and then those tokens are transactions that exist in the metadata of Ethereum transactions. So that's really valuable for companies if you're trying to bootstrap your own little economy, but you don't want to have to go through the work of building your entire blockchain, because that requires teams of people and lots of research. But making an Ethereum token, you could do it in an hour.
Really?
So I think just that ease, right, leads a lot of just opportunists to just be like, dude, it's so easy to make an Ethereum token. Let's just code one up and sell it, and then take this money and run away with it, because there's like almost no regulation. But to like some legit people, they're thinking this is really interesting, that we can build kind of ecosystems, leverage the security of the Ethereum blockchain and all the hashing power that's going into securing the network, and but still have our own kind of siloed ecosystem. So there's a lot of interesting ideas that are coming in this space, but again, just so many opportunists and scammers that unless like you're somewhat aware of what you're doing, it's very easy to just do something really stupid. And
I'm gonna do, before moving forward, I'm gonna do my quick disclaimer for everybody. So I actually hold some altcoins. I'm currently holding some Omise Go tokens and Bitcoin and Ethereum. Mostly Ethereum though, because everyone keeps saying it's great, but I just want to make sure everybody knows, whenever I do a video about Bitcoin, I always tell people, because I'm going to ask you right now, which of the the ICOs, which of these coins or tokens do you think is a good buy? And I'm not saying because of market value. I know you're not like a trading expert, but which of these companies excite you about what they're doing?
Yeah, so I'm the only ICO token that has been built on the top of it. I think the companies that build their own blockchains are interesting, but the only ICO token on top of Ethereum that I find interesting right now is the basic attention token in Brave. And it's really specifically because the team building the Brave web browser is incredibly competent. They've already shipped a web browser, right? So like that's not an easy task.
So yeah, Brave is it's a different
Brave is a web browser that was built by Brendan Eich, who's just one of the like OGs of Silicon Valley.
Would you say he's a smart fella?
Yeah, he's brilliant. And he built the Brave web browser directly to be a competitor against Google Chrome, and because Google Chrome makes money by selling your browsing data, right? So he wanted a way that users could get compensated for basically being the product in this massive online ecosystem. And they decided that the best way to try and approach this problem was to build their own protocol token and build it into the web browser, which is it's a really interesting idea. No one's ever done this before. No one knows how it'll work out. But because you could either build your own blockchain, which is a really hard problem, or you can just leverage Ethereum and their like open developer environment to build a token on top of Ethereum. So they decided that they were going to build a token on top of Ethereum called Basic Attention Token, and just try to raise funds by pre-selling it. And they raised $36 million maybe. And yeah, now they have a huge budget to go after this problem with, and they have a token that will eventually live inside the Brave browser and try to clean up a lot of the mess of the advertising ecosystem. So it's an interesting project. I don't know how successful they'll be with it, but again, like I think when you're looking at the space, you want to look at teams that have shipped like really extraordinary things. So if they haven't shipped extraordinary things, they're probably scamming you.
With the advent of Ethereum now, there's a ton of these altcoins, these tokens.
Right.
And I hear that some of the risk is that they're nothing. It's like some of these coins are just nothing.
Sure, yeah, 100%. Some of these are going directly into people's pockets and then going into hotel rooms and Spanish beaches, and no software will ever get built.
Wow. So I guess what it comes down to is you need to really know what this company is and doing and who these people are who are building the software before you try and buy any of these coins.
Yeah, I would say it's extremely important to look at the history of the team that is building this. If it's someone you've never heard of, it's probably a sign.
Wow. So one last thing, I don't want to spend too much time on this, but we'll kind of wrap this up with something interesting you were just telling me before, and that's kind of security. Are people aware of the potential risks, right? So explain to me like what your thoughts are on security of Bitcoin and these currencies.
So almost nobody that uses cryptocurrencies or is trying to trade it takes security even close to seriously enough as they should. Security is one of the most important things in this space, because if you have your money stolen, then there's no recourse. You can't call anyone. I mean, it's gone forever, right? And it could be, it's very trivial to move money, right? So you could have, millions of dollars stolen in a second and have no recourse whatsoever for it. So it's obviously super important. And one of the things I think people in general don't realize how insecure a lot of internet infrastructure is. So they think, okay, well, if I use a secure password, for example, maybe that is enough. But it's like, no, not necessarily. Even if you're just using the website, even if your wallet is hosted on another website, that's already, has multiple attack vectors into it. So for the most part, if you're storing any amount of serious money in Bitcoin or Ethereum, hold on one second. Let me get a...
Oh, you got a thing to show us?
Yes.
This should be interesting. But while he's doing that, I'll just say this might be one of the most important aspects for a lot of people, because I keep getting people hitting me up talking about how they're buying and how they're excited. I tweeted a while ago because everyone was like, buy Ethereum now, do it.
So there are two things you should do, and these are basically your only two options. One is what's called a hardware wallet. So this is a Ledger Nano S. So this is a physical piece of hardware that has a Bitcoin and Ethereum and Litecoin wallet on it.
Yeah.
So
that's worth a lot of money.
It could be.
It could be. Yeah. You don't want to tell me.
You don't know. And it's made intentionally secure to the point where even if you were at gunpoint, you could bluff about, what is actually inside of this. But this is a physical device. And unless you have both this physical device and the password, you do not have access to Bitcoin. But all that this does is that it'll sign transactions inside the actual hardware. So I hook this up to my computer. You take an unsigned transaction. It puts it onto this hardware device, signs it, and gives back the signed transaction. So which means your private key never even lives on your computer.
Basically, it's the key, and it's off your computer as opposed to being on your computer.
Right, exactly. So if somebody could remote access your computer, they still couldn't get access to the actual keys. And they sell these, there's two brands. There's one called Ledger, and there's one called Trezor. And these two things are essential if you're going to store any legit Bitcoin without really knowing what you're doing. Because you can also do kind of like brain wallets, which is when you write your own code to generate your private keys, but they don't actually live on your computer, they live in your head. So you have your own algorithms to generate your private keys.
That sounds like hard work.
Right, so that's not very user-friendly for most consumers. But that's another approach you could take, which is, it's not even on the computer, it's just in your head how you generate the keys. But for most consumers that are using Bitcoin, I highly recommend getting something like this, because again, like if you just store your Bitcoin in Coinbase, or you store it in Gemini or Kraken or one of the exchanges, all you'd have to do once is log on to Coinbase.com, type in your password, but somebody, that might not be the real Coinbase.com. Somebody could have an access point set up that's just serving a fake Coinbase.com, and just you put in your password, and then they'll get access to all your Bitcoin.
Or they can steal your password.
Yeah, exactly.
Maybe, two-factor authentication might help?
Not necessarily. It would definitely be better than just having a straight password, and I think most exchanges will demand it, but even that is able to be cracked. So,
yeah.
So
Well,
it's really risky to store cryptocurrencies on exchanges, and people probably don't take that risk seriously because they just don't think it'll happen to them. But then you could lose a lot of wealth overnight, and it's not worth the risk.
And there's nothing you can do about it.
There's absolutely nothing you can do about it.
Wow. I guess you could file a police report, but they just probably put it in a filing cabinet and walk away, right?
Yeah, you're not getting it back. And I think
that's scary
because of that. And think about how liquid the market for the thieves to liquidate the money is.
Very
it's
easy.
incredibly liquid. So it's just a playground for hackers right now.
Oh man.
Yeah.
Wow.
So.
All right, man. Well, thank you. Got any final thoughts about cryptocurrencies? I mean,
I think it's super interesting technology, and everyone should take it extremely seriously. It might be as big as like the invention of calculus or something.
Wow. That's a serious statement.
It is. It's a serious thing, though. I mean, like, we've solved digital scarcity. Bitcoin has been attacked mercilessly for 10 years now, and it's still there.
Just keeps going up.
Keeps going up, right?
Yeah.
So this is here to stay, and there's a lot of developer interest. And you have to think about how much money people have made in the cryptocurrency space that is now getting reinvested in the cryptocurrency space.
Oh, yeah.
So it's found a mechanism to bootstrap itself, where there's so many millionaires that have just appreciated their crypto wealth that now invest in other crypto projects. So when you look at these ICOs that are making hundreds of millions of dollars, that's all from people that made money in cryptocurrency to begin with. So it's just like a cycle where money keeps getting back in and back in and back in. And
well, it's probably just Bitcoin. When they do the ICO, people are not giving them US dollars, they're giving them Bitcoin.
Sure, or Ether, yeah.
They bought a bunch of Bitcoin early on, or Ether,
and now they're using it to fund their
trading it back in.
projects. So it's a little bit like a virus, right, on the world that
Yeah.
it's like found a way to self-replicate.
It's going to be interesting. You know what really scares me is when Bitcoin Cash forked off of Bitcoin.
Sure.
So a real quick recap for those that are watching. I did a video about this a couple days ago, but Bitcoin Cash is basically an identical copy of Bitcoin, but they changed it a little bit and it became a different currency. What scares me is that instantly, people who had Bitcoin gained a massive amount of wealth. Wealth was just an influx of wealth into the system from nowhere.
And people who were smart about it knew that was coming and bought Bitcoin in advance of the fork. Because they knew, so when Ethereum forked last year, immediately when the Ethereum chain forked into two, the combined value of the chain was higher than the initial value of the chain.
Like Bitcoin Cash.
So people saw this and they were like, actually, forks could be a little bit of a hack to make a quick profit, because the combined value of the chains will probably trade higher than the original chain. So even though Bitcoin had a software update that was somewhat uncontentious, there were parties that made it intentionally contentious because they saw this opportunity to make a quick dime by forking the chain.
And a lot of people made a lot of money.
Oh yeah.
All right, on, man. Thanks for hanging out and talking.
Yeah, sure thing.
I'm always fascinated with Bitcoin stuff. So, as you guys might know, I've done a couple of videos about Bitcoin now. So I think this is a really interesting topic, and I tweeted this out. With the escalation of partisan violence and just outright insanity, murder, acts of terror, whatever you want to call it, I feel like Bitcoin is a really good store of wealth, especially with what Jordan showed us with the US dollar going down and Bitcoin going up.
Well, it's certainly a good story because, it's much more interesting to read about people making money and trying to change the global financial system for the better than it is to read about people like beating each other with sticks. So it's better for your sanity.
So let's consider this video a nice little break from all of the insanity. So let me know what you think. Comment below if you liked the video, or just let me know what you think. I know I've seen a lot of people say to stay away from crypto because they think it's a scam, but I know a lot of people are freaking out over this. They're calling it like the next .com boom. Everyone's trying to become day traders. So yeah, send me your thoughts and click the like button. You can follow me on Twitter and Instagram at Timcast. If you want to support the work that I do, you can go to timcast.com/donate, and you can sign up to become a monthly donor through PayPal. And I also do accept Bitcoin. So with that being said, I will see you all tomorrow at 4 p.m. for the next video, and thank you all so much for watching.